Hey everybody, welcome to the morning market briefing. We're starting a minute late. The walls caved in all around us. At least the curtains did. It was a very traumatic start to the day. Everybody okay?
We're all good. I'm not gonna point fingers.
I'll take the blame on that one.
They just crashed the entire set slowly though.
Yeah, he aggressively sat in his chair and it hit the back one, and then all of them started coming down around us. So we survived though.
Yeah, we live in a very feeble studio here. But jumping in immediately, want to talk PPI. Tom, you've got the numbers, and I know you've got the expectation for where we are. Another read through on how hot the economy may or may not be running. What are we seeing?
Man, so data point number 2 coming in hot for old Jay Powell. So here we go. So the expectation for the full number, headline PPI, final demand year over year was expectation was 8.3%. We came in at 8%, and that's down from 8.5% last month. And not only that, but they actually revised last month down to 8.4. So that's a big second data point in the is inflation coming down narrative, which is good. But again, good news is in terms of the market and in terms of the bond market and their moves. However, it's not good news in terms of the Fed, I would tend to say, because I think that they haven't changed their stance. They've been very adamant that they're not changing their stance in terms of raising hikes. So I think that this could be a lot of euphoria followed by the Fed hiking rates and people getting upset again. In terms of core, the expectation was an increase of 17.2%, and we came in at 6.7. And then the core minus trade, the expectation was 5.6%. We came in at 5.4. So all the way across the board, we've come in with lower inflation. In fact, just the month over month, 0.4% was the month over month expectation. It came in at 0.2. Not only that, but last month was 0.4, and they revised that down to just 0.2. And so that's a very, very, very powerful inflation is slowing narrative. I mean, the numbers are still exceptionally
That's almost 2% on a annualized basis.
On an annualized basis, that's a massive move.
Big time move.
Gentlemen, thoughts?
I think it's gonna be super interesting to see. We've done this so many times over the last couple of months. Right now, futures have not really moved yet, at least on the sites that I am looking at. It's going to be really interesting to see equity futures pop here.
I bet they're going to be up 2%.
I mean, bond market, for context, when we sat down, I pulled up the Treasury curve, and the 30-year Treasury was at a 4.05, and the 10-year Treasury was at a 3.85, and now the 30-year Treasury is at a 3.95, and the 10-year Treasury is at a 3.75.
The S&P 500 is up over 2%.
Yeah.
Boom.
So
there we go.
Get ready to rock, everybody.
Yeah, right when we started the call, S&P was up 1.04%. So we're seeing liftoff.
NASDAQ up 3%.
Man,
let's go.
The DAC. Ben, how comfortable are you starting to get into the early phases of extrapolating a trend here? And we talked last week, I guess it was, about the CPI print and the number, and just kind of observing that, hey, this is a data point. At what point do you start to feel like, yeah, it's actually happening?
I'm very encouraged by the 0.2% number on the month over month basis. The question is, will that translate to CPI? You'd like to think that competition would help do that. But again, we were talking about the same date, same month, same data, October. And then I really think that things have picked up here in November. And we're going to talk a little bit about the retail earnings, and they don't seem concerned about where demand is right now. And I think that that's going to translate to future price increases going in the back end of the year. So, I think that people want some margin recovery from a lot of these companies, and I think that they're going to try to keep prices high as long as they can and not pass through these lower costs. However, it's good news, and we have to be prepared for both eventualities, that inflation is coming down and can continue to come down. If inflation was actually going down, this is what it would look like. Does that mean that inflation is necessarily going down? No, but this is what it would look like if it did.
Yeah, I think you're making a fair point, Ben, which is that this is the same data. It's a different data set for the same month. So if we were hypothetically writing down that October we had inflation coming down, it was written in pencil and now it's written in pen.
Yeah.
So what we need is another back-to-back CPI, PPI next month before we're really on a path, I would say. But this is very, very positive. I mean, inflation is enemy number one, and we're definitely seeming to see some failure there.
Yeah, definitely positive. I think it solidifies the data we got last week and makes it a little bit more clear and more consistent. You start to build a little bit more of a matrix where you say, okay, well, pretty clearly in October we saw some improvement. But now you got to build on that. That does not necessarily take the pressure off the Fed, though.
Correct.
China retail sales and industrial production. Interesting seeing this data in light of the zero COVID policy and the tweak to that we've talked about. Ben, how did those numbers look?
It was very weak. Industrial production came down to up 5%. It was up 6.3%. Retail sales actually declined. They were down 0.5%. They were up 2.5% in September. So definitely weakness in China. And I think this kind of sheds a little bit more light on the Chinese are moving back on the zero COVID policy. Why might they be moving backwards on it? Because their economy is in not just doldrums, just in a even worse than doldrums. It's going the wrong direction. And I think that Xi Jinping recognizes that. And he is moving to this dynamic zero COVID policy, which is distinctly different than zero COVID policy. And I think that will open up China a little bit more in the coming months.
We did get some retail earnings from Home Depot and Walmart, in particular. Home Depot down about 2.5%. Now that some of that may have changed a little bit in the past few minutes, just as futures reacted to the economic data. But Ben, overall, like, it seems like a decent quarter. This does not necessarily read like a stock that I would expect to be down 2.5%. EPS came in at $4.24 versus an expectation of $4.13. They beat on revenue. Gross margin was right in line with their expectation. What do you think analysts and those that are actually selling the stock are seeing that would differ from that?
Yeah, first point is I think that the estimates were a little bit odd. They didn't quite add up. So I think that was interesting. I think if you look at the numbers, they reiterated their full year guidance. Their full year ends in January, so they have some confidence going into the end of the year. They did beat in this quarter, which could mean that, hey, if you did better in the Q3, then why didn't you raise guidance for the full year? I think in this economy, just don't raise guidance right now. There's no need to. We'll see. Walmart actually did, and there's a distinction there to be made. I think that Home Depot is holding up fairly well. I think that the narrative, though, is that Home Depot would hold up fairly well. It all comes down to the commentary on their conference call. What are project backlogs like going into the end of the year? If you're only guiding to 3%, maybe they're not that strong. I would say that I thought this was a good quarter, and I do think that inventory may have been a little bit too high, and I think that could be weighing on some sentiment numbers here. So that'll be something we have to watch going forward. But I think it was probably on the inventory number if people wanted to take an issue with the quarter. But other than that, the revenue and earnings numbers were pretty good.
Good deal. Walmart, pretty strong quarter as well, up about 7%. Earnings came in at $1.50 a share. Expectation was $1.32. Really nice beat on revenue, $152.8 billion versus an expectation of $147. Seeing relatively a little bit of a reacceleration on the e-commerce side, not quite to the expectation, but better than the last reading. How do you kind of digest what Walmart's done? Do you think there's read-throughs to other retailers?
When they're getting more people into the store and they're getting people spending a lot of money, the ticket price was up 6%. That was actually an acceleration from last quarter. So if you're shopping at Walmart, you're actually spending more money. So inflation is continuing to be an issue there, but they got more shoppers in the door. They were up 2.1% this quarter. Last quarter, they were up 1%. So more people shopping at Walmart and more people spending more money. They're gaining market share with consumers making over $100,000 a year as those consumers mix into Walmart. If you're looking at Walmart as a read to the overall consumer, I think that this is a little bit more idiosyncratic. It's less of a read for the overall consumer than it normally would be. Walmart executed phenomenally this quarter. The inventory came down. If you look at their inventory numbers, they were up. And of course, inventory was the big issue in the springtime. It was up 32% in the April quarter, up 25% in the July quarter and up just 13% in the October quarter. And that's expected to come down further in the January quarter. So we're seeing some really good progress on the inventory side. That's translating into better margins. If you look at their margin profile, their year-over-year margins posted their best year-over-year comp since January. So you're seeing a lot of self-help there. You're seeing some pricing power. They're taking pricing. They're making sure that they have leverage with their suppliers. Inventory is down. Markdowns are going to start declining here in the January quarter. And I think they're positioned to do extremely well. It probably bodes well for Target and Costco. But again, I would be cautious in reading too much into those companies from this report, because this time around, Walmart was much more just superior execution across the board. We'll see what Target has to say tomorrow, and Costco, I think they report later this week or next week.
Yeah, I think, reading into that could be a bit of a risk, I think, for certain people. I mean, you mentioned the $100,000 plus income folks being a little bit more of a presence at Walmart. I think I would caution everybody against reading through Walmart being up 7% and applying it to a Target.
Yep.
Those customers are moving from somewhere on some goods, at least. The Bank of America fund manager survey is out. The bull bear indicator remains essentially in the gutter. Ben, how are you seeing people positioned?
And I think this bodes this fits in very well with the inflation coming down and stock market going up. I think that fund managers are extraordinarily bearish. The cash levels are at the highest level since the dot-com bubble. So they're higher even now than they were in 2008. That's how negative fund managers are. 77% of fund managers think there's a global recession will be coming. And, they continue to sell tech. Tech is now 2 standard deviations below what it has historically been. So ultimately, I think that you could see this market trade higher as these fund managers have to performance chase into the end of the year and have a window to do so with these lower inflation numbers. Whether that can be sustained, I think this would be a result of position offsideness versus fundamental improvement. So you could see a bit of a rally in financial markets as you guys deploy more assets, but I would be cautious into trying to trade that or trying to time that to perfection.
Yeah, I think that's the biggest thing. I mean, I think people are probably offsides, and I don't know that I necessarily blame them. I don't want to come off as overly critical of the fund managers, but to be positioned as they are and to actually see public enemy number one start to potentially erode a little bit, they're gonna have to catch up.
And it's easy to do. I mean, this is why we stay so disciplined to asset allocation targets here at Narwhal, is because we have, I mean, everyone watches the calls. It's not like we were exceptionally bullish before that CPI report, but we were sticking to the asset allocations that we manage for clients. And as a result, we're positioned to take advantage a little bit of this, even though that wasn't necessarily our base case. So, that's why staying disciplined to asset allocation is extremely important, because it's extraordinarily difficult to time those market shifts.
Yeah, it's very hard, and so much of it comes down to sentiment of the market participants, and that can change quite quickly, as we've seen, even as evidenced by the bull bear indicator in the past. I felt like all of last year we were just hovering at like a 6.5, 6.7, and turned pretty quickly when it didn't turn. So you've got to be mindful of that. Former President Trump making an announcement tonight at 9 p.m. It is largely expected to be the announcement of his 2024 presidential run. We have not seen a president come back into office successfully since Grover Cleveland in 1892. So it's been
a hell of a year.
Yeah, been a minute. I'm sure this is going to be a wild speech, as it always is when Trump's talking. What are kind of the things that stand out to you guys? Are you looking for anything in particular, or do you think it's just going to be more of the same?
I'm curious, 1, who's going to televise it? 2, if he talks about having the election stolen from him, which he's been advised not to do, by the way, by people like Kellyanne Conway. And 3, if he makes it an optimistic message of look back at 2019 and how great things were, or if he has a dire message like he had in 2015 when he announced his campaign, where he basically painted an unbelievably grim picture of the United States, and that carried him to the election victory in 2016. So I'm curious to see the tone. I'm curious to see if he talks about the election being stolen, and obviously, does he actually announce the presidential run or not?
Yeah, Tom, anything?
I mean, I probably won't be watching. I'll probably be in bed. I would say though, Andrew played the Dave Chappelle opening monologue from Saturday Night Live this weekend in the car. We were driving back from visiting some clients in Birmingham yesterday, and I would say listen to that. I thought it was pretty good. He described Donald Trump perfectly as the only guy to ever come outside the house and say, "Hey, everything you think we're doing out here with avoiding taxes and everything, we're doing it." And then he walked right back in the house. That's so he's an honest liar, which is that he tells it like it is, in the fact that these people are putting the screw on everybody. But that's the way it is.
It's going to be interesting, the dynamic with the Justice Department. Then you had that in the notes, but obviously with the documents that were seized from Mar-a-Lago, the investigation trying to at least feign impartiality as you're investigating a rival presidential candidate is going to be
the added thing is Biden may actually want to face Trump versus some of these other candidates.
Yeah, I agree.
So,
it's interesting timing. I mean, I think even among, kind of Republican news sources, I wouldn't say Trump stock is particularly high right now. So I'm actually a little surprised that he's going forward with the announcement right now.
Among Republicans, his support has dropped from 40% to 30% in terms of people who would prefer Trump over someone else, or just prefer Trump over necessarily the Republican Party. And people who say they're more Republican than Trump follower has increased from 50% to 60%.
Yeah.
I mean, by the time 2024 rolls around, these dudes are going to be so old.
Yeah. I mean,
So
76 now.
And I mean, how old is Biden? 80?
80.
So it'll be 82 by the time. I mean,
it's really just like who's going to be the world's oldest man, because they're going to get
my money's on Biden.
great medical care. I mean, he's leading.
That guy seems so old.
He's leading so far. All right, we'll wrap it up there, and we'll be back tomorrow morning at 8:30. Ben and I have a meeting, so it may just be Tom running with.
Yes.
We'll get Harrison in.
There we go. Tom and Harry.
Let's go.
All right. See you guys.